Good turnaround Tuesday, everybody. How are my trading warrior brothers and sisters doing today? One of my turnaround Tuesday candidates is Aussie up here. Back at major resistance. Probably have something like a 78.6 retrace of this recent rally. Let's take a look at the fibs on it. I believe besides the weak dollar that we've been getting some lift here in the Aussie with the gold market, right guys? So I don't want to do it from here, so just going to take this off. Let's do it from here. From this spike high. Just eyeballing it, I'm figuring 78.6. Let's see. Yeah, close. 69.80, 78.6 back. Eurissa high, the move. Right? 69.80 is it. Actually, I think that there's a shot. Get rid of this for new lows. And the Aussie eventually. There's your daily right against this 50-day moving average. So this is pretty key resistance. And the low on the flash crash, which a lot of markets have eaten into, was 67.44. So I think there's a chance that we test this down here. So that's one of my ideas for today. I was actually looking for higher euro to sell into. Thought we could get to 14.40 first. So right now for me, this is a leave it alone. Maybe we will have one more high up here. But yesterday I was prepared to buy the Dixie at 95.80. I think Dixie is way overdone. I don't have any divergences on, say, some of the longer term time frames in Dixie. See this momentum. But shorter term, yes. And we could rally all the way back towards 680 and just be correcting the big decline we had from the failing rally at 97.80. So I don't think it's real wise to press the short side of the dollar right here. Crude is trying to make another new high up here, but we're in this sell range of retracements. Look at, I have confluence of moving average up here at 58.60 to 59. I will attempt it this week. You really have to be careful. And on crude, what I would suggest is if you have profits intraday, that you can take at least some of them. I believe doing that is the right thing to do in any instrument, but especially with what could happen overnight in the crude oil market. It makes it a tough trade with the geo backdrop, but sometimes the hardest things to do are your best trades. So, you know, shorting crude in the face of that we were, you know, a few minutes away from some type of attack on Iran for shooting down our drone, gives you pause to, you know, maybe I shouldn't even trade crude under these circumstances, but you can't let the news background shake you away from price action, and price action has been very bearish from up at that 66.5 level. You know, we had about a 16.5, call it $16 break. We're about halfway back here at 58. So I'm looking for a failing rally here. Also, something else that's come back, and this was a great call by Steve and some of the other guys in copper, and I think I even talked about it, now approaching some levels where this too, I believe, is going to be a sale. Maybe up here around this 275 level. You could see that this 275 level was pretty important here before the breakdown. Maybe it's got 280 in it. I haven't done the fibs in it, but of all the metals, compare, you know, gold, silver, copper, and, you know, this has been the dog because it's even more economically sensitive than the other laggard, and they're finally getting the silver down 8 cents now. So that was a short. I tried it yesterday at 45. Let's see if we're going to roll over. We got very close to trying the highs again I'm just going to sit here and see if we could get another dollar low. And if silver is able to make one more marginal new high, as you can tell, we were diverging, but these momentum readings are pretty good up at 76. So let's see if we could get one more high here. Gold, same thing's happening. You know, I can't short the gold. So if I can't short the gold and I'd like to do something because I think gold is overdone, I should be looking for some type of low here in the yen. Maybe it's acting terrible. Just like gold is acting great. Here's a confirmed low, but you go a little bit more macro on the 4 hour, and we're diverging a little bit back under this wedge line. So would really like to see it do something right. Okay, I was calling for this line to be tagged all the way up here. So it's one thing to have a target, and I was actually projecting what it would do after it met this red line, and that was to bounce off it. And instead, all it did was slow down the decline. So we'll see. 106.30 is 78.6 back, but I'm looking for a yen low in here. I don't know if it's today, but I think that there's a potential for a big rally in the yen. And if we get this dollar bounce to 670, we'll see how the yen acts. Something else that's going on here, I've had a change of heart on, and that's here in the yields. So we haven't quite made a new low in the 10-year yield. As you can tell, we challenged it pretty good, and it may be a third drive, but as you can tell, it's diverging. Shorter term, so far putting in a higher low. Maybe we're going to get this third drive, but I was thinking we could at least get a rally back towards 215, 217, something like that. I know people are talking 150, and some of the analysts I respect are talking 170, but I still think there's at least a bounce before one more wash to the downside. In that pair. Euro pound, I've been playing around with it for a few weeks. Every time it looks like it's going to break down, it doesn't. I think it needs one more high for a 3, so keeping that on my radar too. And if I'm perplexed about some of these positions, all I have to do is go look and see what my teammates are thinking here for some more clarity. And it's really been an edge for me over the last 2.5 years or so to see what Blake and Greg, Andre, Steve, what they're all saying about this. Quite a bit of unanimity. Let's see what kind of active patterns in play we have. The Aussie, Greg is bullish on the Aussie, looking for 72. So that makes me nervous about my turnaround Tuesday trade. We have Greg and Cat Yen, Euro Aussie, Andre 3 hours ago. Okay, so our hit rate is pretty good, 51.82. So that's a little bit more right, 1 out of 2 times. And if your average target is 3 to 1, risk reward, you're going to make money. So look at this great call by Blaker in the gold last week and Blaker in Aussie last week. So you can tell they're not all winners. See, I'll disclose it. Anyone who says that they hardly ever lose, and I guess there are people that might have higher hit rates, but this is a very good one. And if you can get to 1 out of 2 being right, you're going to be a successful trader. And you may want to also go to Forest Park FX. They sponsor FACE. So you're here for free because Forest Park is sponsoring it and wants to help you find a better broker, an additional broker, generate additional revenue for either paying for your subscription here at ForexAnalytix, or if you're in the US, you could get a rebate check. You could choose a rebate check if you're overseas as well. So get a hold of Jason Trent here, and they will answer the phone if you call them on Skype. Okay. And let's see, I know that Blake was scalping around yesterday and curious if he sees anything that's really stand out. Very nice blog by the team. Okay, you guys have to go check out this blog. Oh, there's Bryn. Okay. But nice piece. Where is it? It's got, there it is. Okay. So there's Steve's stash. He took a picture of Steve's gold stash and put it on the blog. So 6 years of consolidation, massive move. So we'll see if we ever get a check back of that.
Can you imagine owning one of those gold bars?
Yeah, how much does that weigh, you think? What is that one?
I don't know. I mean, I have a couple gold bars. That I've had, I've just personal.
I think they call these bricks, actually.
Those are bricks. I mean, my bars are like,
thinner.
I've got thinner. They're like wafers.
I have the chocolate ones. Do they count?
Oh, you have with the paper is gold still? Huh?
No, but you buy an ounce of gold. Buy an ounce of gold. I mean, it's an ounce. I mean, it's right. I've got those in the bank, and I keep them in a safe deposit box. But they're not those. I mean, those are like freaking bars. I mean,
yeah, they're like pounds.
I mean, that like a gold bar that was that size, I would assume is about
a few pounds,
100 grand, maybe.
Yeah. Well, you know
roughly?
What? Silver's even more cumbersome. Because I used to buy silver coin bags, Blake. It's a junk silver pre-65. And, just dragging them around, you could get a hernia. I'm sure that Stelios has with all the silver he has probably. And I know he weight trains. Stelios puts a silver coin bag on each side of a broom handle and curls it.
You know it, baby.
Buddy?
You know it.
So those look like 100 ounce, right? So you're talking 140 grand for one of those big blocks. And then, I only have the ounces, and I have them in silver too. And you're right, it's a lot. I mean, it takes up a lot of space. I mean, when you have those ounce silver things, and they're just
fun to look at and play with.
It is kind of fun to see like a big, to see the big. We get them in sheets, So, yeah. And I've been acquiring precious metals for years, but not like in mass quantities, but I just acquire stuff and I just shove it in the bank and safe deposit box. Well, I'll never see it again. It's silly because it's like, what do you do with it? What are you going to do with your silver, Stelios? I mean, what are you going to go play Monopoly with it with your kids? What do you do with it?
Pass it along to the kids.
What do you do with Bitcoins?
Well, yeah,
that's a question.
You know what else is a good? Because what happens if they close the banks and you can't get to your box?
Let's hope that they don't close the bank that I'm in, because it's like one of the biggest banks in the United States. But that would be, I don't know. I mean, I don't know.
Yeah. Blake didn't mean it. He has buried them at the foundations of his house, actually. He just doesn't want people digging it out.
Yes, in the foundation of my house. Good news is all Arizona homes are built out of stucco for the most part. And no, we here in Arizona, we don't have natural disasters. Our natural disaster is 120-degree weather. So that's it.
Yeah.
For the most part.
Or water shortages.
Well, no, we have good lawyers. We got enough water from Colorado. You guys are the ones that are screwed.
Steal from us.
We pass the water.
You steal our water, and then you drive out here to our beaches.
Yeah, pretty much. Yeah.
I don't know you, Zoni.
Anyway, but no, that's a big gold bar. I mean, those are big. Like,
all right, Martin's saying 440 ounces.
If 440 ounces, oh my
Yeah,
God,
gold
is that
bar.
what that supposedly is?
Yeah.
That, I mean, that's near $1 million, I guess, roughly. You know, that's a lot of.
I
It's a
think
lot
our
of.
president is building an outhouse.
It's
with
going to
gold.
be a lot more than $1 million in a few years. Trust me on that.
That's a lot of do re mi. Well,
Anyway,
if
gold finger.
if you guys have read the
Great
blog,
blog, by the way, Blake. And God.
that's Stelio. So I only did part of it. I just drew up
Charts.
some charts and stuff. But I'll tell you, gold is bullish. And I was just talking to the guys in the office at FX Macro, and we were just discussing the dollar. And I told him, I'm like, I have a hard time being bullish the dollar while gold is broken out. I mean, that's obvious. I don't want to. That doesn't mean I won't buy the dollar. I just it's, if I buy the dollar, it's got to be very near term. It's got to be one of those situations where I just scalp in and out if I want to go counter trend, and that's it. While gold is trading above 1400 or really 1370, there's no reason to be there's no reason to be bearish gold, and there's no reason to be bullish the dollar, in my view. Now, we do have something rather important today. We have the Fed chairman, who's speaking at 1 p.m. Eastern, which is 10 a.m. Eastern. I won't be in front of the computer right at that moment in time, which I didn't schedule my my meeting with. There's a young kid who had sat with me for 2 weeks. He was here at the beginning of summer, or the beginning of end of May, and then he was here last week. I'm meeting with his father for coffee today, right at that time, like about half an hour before that, and I'm because he just to kind of give him an update on his son. And by the way, I doubt Jack is listening in right now. He is in Durango, Colorado, with his mom on holiday. But I was telling the guys and gals in the chat room, it's pretty neat to have a 18-year-old kid sitting next to you who is so interested in the currency market and so immersed in it. And I look at my own oldest son, who's almost 15 years old, and I can't imagine him in 3 years being as interested in the currency market as this kid is. And not only is he interested in it, he's really quite talented in reading charts, and and his understanding in the currency market is far superior than a lot of adults that I've met that are twice his age, that are just getting into the currency market. Like his understanding of economics and how things work, and why currencies go one way or the other. It was pretty inspiring to me, actually. I think about myself when I started trading at the ripe young age of 25, even though I started in the business at just as I was turning 24, or no, just as I was 24. I was 24. But really, when you start in the business, you're understanding. I have to say I was interested, but my interest level really didn't really start to accelerate until I was in my mid 25, 26, and I started trading. And it's kind of like when you're 25, 26, you start to get a good idea of what you like to do or want to do. It's really neat to see such a young person really immersed in the currency market. But anyway, I'm meeting with his father and having coffee with him, and telling him my thoughts, which I'm more than happy to do. The only problem is that Pal is speaking today, so just keep that in mind if you're trading the dollar. So what we're going to be looking for today is see if the Fed Chairman Powell will confirm the dovishness that the market is obviously interpreting post FOMC. Now he is speaking. Let me just confirm this. He is speaking today at he's speak about the economic outlook and monetary policy at the Council of Foreign Relations in New York. Audience questions expected. So this is going to be quite possibly a market mover today. And, my 2 cents as far as, technically, the euro where it closes today is going to be really important. Is it above or below 113.50? Now, 113.50 is big for a couple reasons, and I'll be specific here. A, it's the breakout point. B, it's the 200-day moving average. So if you guys want to know my views, I think that we can see a dip in the euro, but where we close today is going to be pretty important. Do we close above the 200-day moving average, or do we close back below it? Because if we close back below it, there might be room for the euro to slump back down towards the 113 in the big figure level. So which is quite possible. We could see this again before a move higher. And you want to be on guard today. Like I said, I think that the euro is going to be the mover today. Now, the flip side of this is for those of you that are like, well, Blake's expecting a pullback. I'm hoping for a pullback. Let me make the distinction here between hope and what we're going to get. I'm hoping for a pullback in the euro dollar to 113.50. That doesn't mean we can get a dip to 113.50. If Powell comes out and says, we've seen all these risks emerge out of nowhere, and all these risks emerge about the U.S. economy. He's just basically confirming his dovishness, and the euro dollar could be trading at 114.50 by the end of the day. So don't assume that the euro is going to pull back. I'm hoping the euro pulls back. There's a difference between hope and hope and knowing what's going to happen. I just hope the euro is going to pull back because I don't own any, and that's it. And I'm doing it more from a I guess you can say more of a selfish standpoint. I want it just so I can be short dollars. I just want a little bit of a euro pullback so I can get short dollars because I'm not short any right now. So anyway, that's just my food for thought. Now for the euro. Now the cable was rallying pretty substantially. And I'm going to ask Delio since he's probably here right now. Was there a reason why the cable sold off? I don't think there's any reason why.
Yes, there was a number which is very volatile. The CBI Distributive Trade Survey, and the number was very, very negative. And it's basically an indicator that shows how well the retail sector is doing.
Right, CBI realized sales, right? So that number was pretty weak this morning.
Very weak. We were expecting -10. It came in at -42, which is, as far as I can see, a low of quite a few years. But as I said before, it's a very, very volatile number. But really, it's a bad number. It really is a recession number, basically. But let's not, ahead of Brexit, let's not get too ahead of ourselves. But yeah, it was a bad number.
Okay, yeah, and you can see it's right here. It's -42 versus -10 expected. So, yeah, that is a pretty negative number, and that's what hit the cable. And I'll tell you, just technically, we've run right up into resistance once again, and while we're below this 127.70, 127.80, you got to be very careful. I think it's the squeeze above it, is where things start to get a little bit more interesting as far as the cable goes. But with numbers like that, it's going to be difficult for the pound to make much headway. It's got to be more of an overall dollar move, I would assume. Coach was talking about a turnaround in the Aussie. Here's my only gripe with that, Coach, is we've taken out this downtrend line. So with gold going higher, the natural trade for the Aussie is going to be up, and all we need is some positive China-US trade deal news, and the Aussie is going to be so far up in Shorts' face, it's going to be ugly. I'm not long the Aussie. I'm just, pointing out what I'm seeing here is that we are above this downtrend line. And so selling it to me is a little scary, especially if the euro gets back above 114 today. Like, you may look at gold and you may say, well, the DSI on gold is 96 and gold is very overbought. Yeah, I would agree with that argument, but that doesn't say anything about the euro dollar and the dollar itself. The euro dollar and the Aussie and the dollar in general has a lot of room to run based on where we're currently at. And I look at the dollar index. The dollar index happens to be trading at 96, which is is the 127% extension of this last move higher. But we haven't completed this double top. And now remember, the double top completion takes us down to about 95, roughly about 95.75, and 95.50 is 161% extension, and then horizontal support comes in around 95. I think the dollar still has a lot of room to run lower, so you have to be a little careful about trying to buy dollars here. Even on a daily basis, we're not oversold yet. So, but those are just some of my thoughts regarding the majors. I'm going to be, passing it over to my colleague, Steven Stelios. But I want to say, if you guys are not, if you want the rest of my analysis is posted at the end of the day, every day on all the majors, plus myself, Paul Franco, Amanda, Steve would do a lot of the updates for the basic technical analysis. That's not to mention the harmonic and Elliott wave analysis that's done by Andre and Grega, and then Stelios's macro updates. But through the basic technical analysis, you'll see my analysis throughout the course of the day, and at the end of every North American session. But I also want to mention, if you have not visited our sponsors, Forest Park FX, you want to be involved with ForexAnalytix and possibly get it for free, contact them right here. There's a Skype address and the broker email right here, and you can get in touch with them. And if you're in North America, you could be part of the cashback rebate program. So make sure you get in touch with them. Because they are, our partners, but they're very much in line with our ideas, and their opinion is, as long as you continue to succeed, they're going to continue to thrive. So they just want to find you the best broker based on what you're looking for. So Steve, Stelios, I'm going to pass it over to you guys. How you both doing today?
Very well, thank you. Good
Steve,
morning.
I hear they finally installed a telephone wires where you live.
Oh yeah.
That's good. Welcome to the 21st century.
Next, waiting for water.
Next, okay, good,
Yeah.
good.
So we don't have to walk to the well, every day, and bring it back.
Next thing you know, you won't have to poop outside either. Well, that'll be nice.
That's going to take longer.
So what did they do? They dropped in a new phone lines in your area.
They switch everything to VoIP technology now, because of course it doesn't make any difference for the client, but it saves them a lot of costs.
And I know we joke about this regarding Greece, but I'll tell you, Greece is. I've been to a lot of countries in the world over my lifetime, through my travels in the military, and even with the Wise Trade Group, traveling all through Asia and Australia. There's not a lot of places that I'd rather live than home, and home is home to everybody. Obviously wherever you guys live is home, but out of all the places I've been, Greece is one of those places that I would honestly think about living, because it's such a great country. And you know, I joke about the technology, but they've got everything there. Aside when going on the islands. On the islands, you're kind of in obscure places, but it's definitely a great country. And by the way, Steve and Stelios, just so you know, we had conversations with my father-in-law, who is originally from Athens.
Nick.
Yeah, it looks like we're going to be. Oh, did we get some data? Oh, what?
Yeah, good Canadian data actually.
Oh, so the Canadians just can continue to press lower. Sorry, I forgot we had Canadian data coming out.
Don't worry.
But just want to let you guys know, I'm probably going to be coming to Greece, you know, next May. It looks like
Great.
Yes,
Great.
yes. So yeah, I know I haven't been back in 4-5 summers, but we're going to come back.
Good.
Making our way.
Perfect.
All right,
Awesome.
guys. Hey, I'm going to pass it over to you both. You guys have a wonderful, wonderful day, and I'll see you guys. I'll see you guys tomorrow.
Bye-bye,
Thank you,
mate.
Blake.
Good hunting,
All right.
Blake.
Good stuff. Okay.
I'm driving to Greece. I'm leaving today.
You're most welcome, Coach.
I put it's going to be on a raft, and
You know what you have to do. You just have to ask the genie.
oh yeah,
the joke with the guy that finds a genie.
yeah. There's many of those. Go ahead.
And the guy finds a genie, and he
3
rubs on it,
wishes.
and the genie comes out, and he's like, "Come on, dude, give me one wish, and I'll grant it to you." He's like, "What the hell? Are you a real genie? I mean, you get 3 wishes." He's like, "Nah, I'm gonna give you one. So choose whatever you want." So he thinks a lot, and he's like, "Okay, I want you to build me a bridge because I'm afraid of plane travel, and it takes a long taking. I want you to build me a bridge, from the New York to to Paris, because I want to go see New York, but that's the only way I'm going." And the genie is, "Come on, are you serious? I'm not going to build you a bridge, across the Atlantic. You have to choose something else." So the guy's like, "Okay, I want you to make me understand how women think." And the genie is like, "Okay, how many lanes do you want the bridge to be?"
Good one, man.
Yeah. Okay. So that was a good one, actually. All right. So what else? What do I have to say? I don't have that much to say. There's not much happening. Actually, Amanda very correctly said when we were talking about the pound that Boris Johnson said today. I missed that headline. He apparently said that on the end of October, the UK is out of the EU no matter what. And up to now, he has always been saying that, look, I prefer a deal, but I'm going to prepare for no deal. So that's a slight change of tack. Again, it's only words, but you know what it's like. And really, the only other thing that's happening is we had some talk from U.S. officials about the, there's a meeting this weekend in Japan between Donald Trump and China's Xi. And the officials have been saying basically, don't expect anything. They're playing down the whole thing. And actually, Bloomberg had a very nice headline on this. They say, "Nothing to Xi." That was pretty good. I like that.
Indeed.
But otherwise, it's been a very quiet evening, really very quiet evening and morning in Europe. So nothing, really nothing.
Okay, is it true? I just saw a headline that we're going to have a British Prime Minister at 23rd of July. Did they actually mean that, or by the 23rd of July?
Good question. Amanda, help us. I don't remember the exact date. It's in July, but I don't remember the exact date.
I think if it's an exact date, I think it's the 23rd, which means that there's another month, if that's the case.
Yeah. Okay. Well, give me a few minutes. I'll find out.
Okay. Olivier has a problem joining the webinar, from what I see. Okay, please wait for the host to start this webinar.
There we go. Simon says on the 23rd of July.
Okay.
Thank you, Simon.
Okay, thank you very much. So, okay, so let's let's have a look at what's happening in the markets. Just to let you know, today the link was blocked for several of us. We looked on YouTube, but not working with Zoom's link. Yeah, we do have somewhat of a low attendance for our standards. Stelio, can you have a look at that, please?
Yep. Okay.
Okay, so USD CAD, we had some Canadian data. So USD CAD, keep in mind, you know, I'm keeping a close eye to it. First of all, it's currently at the 78.6% fib. Second of all, and most important, is that we are approaching this channels support. Okay, so I'm really curious to see what's going to happen from here, because a break below this trend line, below this channel in essence, which has been forming since summer 2017. So this is a 2-year ascending channel, is definitely going to be a major bearish development. So you like the USD CAD, you want to be long the USD CAD. Let's also see if we have equality of the two legs lower. Just by eyeballing it, it seems like that might be the case. So let's see. Yeah, so we also have a target of 131. If you measure the first leg lower here with a potential second leg lower, so that's at 131. So 131, a major level to watch. So we didn't have a look at the USD CAD yesterday. That is why I wanted to start by it, since we had some data. One thing is for sure, we've seen some nice downside momentum. We've already broken below the inner ascending channel, and this is the last stand for the bulls here, in my opinion. So I'm eager to see what's going to happen from here. An extra reason is obviously the fact that it's very decently correlated with USD NOK. I'm still short, looking for 840, 841. As far as I'm concerned, as long as we remain below 860, USD NOK remains a sell on rallies. Keep in mind that at the same time, and this is definitely one thing that is might help them stall their descent, is the fact that crude has actually found resistance at this area we were looking for. This is the third consecutive day that we've been unable to penetrate through this 57, 50, 58 support resistance area. So I'm paying close attention to that as well. A pullback from here is definitely going to help USD NOK and USD CAD rebound, even if that proves to be corrective. So crude, USD CAD, one on resistance, the other one almost at support. So that is it. Now let's go through the metals, and let's begin by having a look at what's happening today with gold. And I think it's a better idea if we go to a 4-hour chart, because as you see, we already have quite a lot of divergences. I mean, this momentum has been amazing. I mean, and it is to be expected. If you remember, I was specifically mentioning that within 24 hours after we penetrate through 1360, we can find ourselves at 1400, and you shouldn't be trying to fade that move. What remains the case is that within now we've broken above, like, this is the 4th trading day. Within like 3.5 days, we've seen a move higher of roughly $80, which is crazy. But we now have like divergences on all time frames. We have like an extremely overbought conditions, and at the same time very, very bullish sentiment. Now, does that mean that I would be shorting gold? You definitely can. I mean, I'm monitoring this ascending on the 4-hour chart. I'm monitoring this ascending channel. We seem to be getting close to testing support once again. But personally, as I've said multiple times, yes, you can definitely short this one and scalp it lower, because at some point it needs to pull back somewhat, perhaps even more than somewhat. But personally, I would rather be looking to buy the dip, because when you see explosive moves like the one we've seen, and they make sense why they happened. I mean, they have a fundamental reason that they happened. And from a technical perspective, they've created, such a huge technical event. It's going to probably be very unhealthy for your trading account to try to fight it, to go against it. Now, regardless, if you really want to do that, as I said, I'm monitoring this ascending trend line. We might get a pullback down to this area, or perhaps down to that area, worst case scenario, before higher. But, I think, as I said before, that you should be looking for areas to buy a dip and, other than anything else. Now, silver still underperforming. And if you remember, I cautioned multiple times that, you should go with gold, since the gold-silver ratio is clearly pointing higher. And if you see, actually, the gold-silver ratio is accelerating higher. So here as well, we've had a technical break of significance. We've had this multi-year ascending wedge, which instead of breaking to the downside, which very frequently happens to wedges, we actually broke to the upside and we're accelerating. So, this is it. I mean, you have to respect what's happening here. We're now above 92. Speaking of which, let me remember, because we might be quite close. Yeah, the all-time high was just below 100. So the all-time high, here's a monthly chart, by the way, the all-time high was just below the point that you needed 100 ounces of silver to buy 1 ounce of gold, and we're not that far away from that anymore, right? So it is what it is. So gold overperforming silver is a theme that is still in play, and that is why, if you have a look at silver, for example, today, clear divergence, gold up today roughly 0.4%, silver down today 0.46%. So quite divergence today, which might also be pointing to gold running out of fuel quite soon. If you see the daily chart so far, it already has quite a long week higher. Now, even if if it actually manages to close negative on the day, that's going to be quite a big reversal, pointing to a larger correction lower. Now, having said that, I know that a lot of people I see, Aussie and Kiwi, have been quite popular the latest days in the chat room. I just want to reiterate here that, of course, since I have clearly stated that I'm looking for opportunities to be selling dollar. The potential for Aussie and Kiwi to move higher are there. There's no question about it. But at the same time, Aussie and Kiwi haven't really, from a technical perspective, broken any key levels, right? So 70-30, 70-10 to 70-30 in Aussie, we're not there yet. Until we break above that, I remain skeptical and cautious. And in any case, I do believe that, if you want to be short dollars, other pairs are, producing better opportunities. The same deal with Kiwi. In this case, though, the level to watch is 67.10. Okay. 2 days ago, I mentioned, yesterday, actually, at the end of the day, I mentioned USD SEC. USD SEC suffered again yesterday. I think, for example, this is a much better opportunity. USD SEC daily, RSI now in oversold territory, which is a good thing if you're looking lower, because in a bearish move, you really want to see oversold levels getting hit in momentum indicators. Now, obviously, you shouldn't be selling when the momentum indicator is very oversold, but when you get oversold readings, it gives you extra confirmation that selling rallies, and corrective moves in momentum is the way to go. Okay, so if you get lucky by any chance and you see this 937 area being tested again, I think it's an excellent opportunity to be selling USD SEC for a continuation lower. So definitely, a preferred short against the Aussie or the Kiwi, in my opinion. Now, I want to go to the yen pairs because we haven't had a look at them in, at least a couple of trading days. So since last week for sure. First of all, USD yen is still dripping lower. Okay, it has produced a series of, leg lower, correction higher combinations. And, we've recently had one more. If you remember, I kept insisting that this price action that we were seeing there after finding support at this 108 area was definitely corrective in nature. And, you should have expected a continuation lower that has already manifested. The question is where to next? And, the answer is that the 78.6 of that spike low move at 106.30 is the only level that I can see here that makes sense as the next target. There is no impressive momentum to the downside. There's no question about it. That is why, despite seeing clear signs that the USD yen is going to break to the downside, I prefer to trade on other stuff. But having said that, and I'm starting from the USD yen because we're going to have a look at the rest of the yen pairs. You have no reason or no indication that the USD yen is about to turn higher, which means that you have no indication and no reason to think that yen is going to help you in any of those pairs if you're actually expecting it to weaken. Okay, now let's have a look at some of those yen pairs. So, one, Aussie yen. As you see, Aussie yen is also pointing to a possibility of a rebound, but it is too early. I mean, you can definitely draw this as a descending wedge, but it is a little bit arbitrary, okay? Because this trend line resistance is a little bit arbitrary. I mean, it passes through some weeks and some points, but, I would definitely need to see a lot more evidence. Now, if you, for some reason, you're really eager in being long the Aussie yen, at least there is one thing going for you, and that is the risk reward, right? Because, we had that spike low roughly at 74 cents, at 74, sorry. Now we're at 74.60, which means like a 60, 70 pip stop loss with a potential of, moving back towards 76. So, Aussie yen still very unconvincing that it's actually moving higher. But as I said, the risk reward is there for you. So if you really like it and you believe that USD yen is about to bottom as well, you might want to try your luck there. Same deal here with the Kiwi yen. Still not sure this is what we're looking for because, it might be a descending wedge, it might not. In any case, we're currently testing resistance. Actually, earlier today, we're testing resistance. We're currently a little bit lower than that. We've also had some clear RSI divergence on the daily chart. So, I wanted to show both of them because both show a potential for a reversal and a good risk reward. But as I said, this is not me advocating that you should be going long because from what I see, both by looking at the Aussie against the USD and by looking at the USD yen, still very weak evidence, okay? But as I said before, at least you have a risk reward that is, working for you. At least you'll be risking very little if you want to jump into that. CAD yen, more or less an equivalent situation. We've been holding this horizontal support area. You can even see this. You don't need to have a very good eye to see that it's even potential inverted head and shoulders formation here. Now it's a little bit of a leap of faith, but whatever. Regardless, I do think that 82 is resistance, and if we do break above 82, that opens the door for another move towards 83.40. So, the level to watch here, if you're looking for a reversal or if you believe that a reversal is 82, a break above it, I think should extend at least towards the level we said. Now, Euro yen and pound yen. Here is Euro yen. Euro yen consolidating so far, as far as I'm concerned, so far this looks like another bearish consolidation to me. We've had a larger one here, a big triangle. We broke below it, and we seem to be forming another one. Now, can this end up being a bottoming pattern? Yes, it can. Is that the most probable scenario? No, it isn't the most probable scenario. Okay. Irrespective of that, if we do break below this 78.6% fib and previous low at 120.70, I do think that we should be extending lower, targeting first this spike low at 118.80, and the next area of support is closer to 116. Now, alternatively, only a break above 123.30 would turn me, somewhat more constructive in euro yen. Until that happens, not much to discuss here. And since, if you remember, I mentioned that yesterday as well, cable is stubbornly finding resistance here at the 128 resistance area, 127.70, 128. And as you understand, that is one of the main reasons why pound yen looks that bad. As you see, it's probably the worst looking among the yen pairs that we already had a look at. It actually looks like it was forming another little bear flag here and seems to be rolling over and potentially headed lower. One thing is for sure, you needed to see a lot more happening here to even start considering the potential of a bullish reversal. Yeah, I know that somebody can even say, yeah, isn't this potentially also something like a descending wedge? Yeah, okay, with a leap of faith it can be, but so far price action momentum don't really help out. There is some RSI divergence as well, but sometimes strong bear moves or strong bull moves might display RSI divergence for a decent period of time before you actually see
till you're broke.
Yeah.
And Steve, we have Bryn Kelly on today, and she focuses on energy. I'm curious what you're thinking up here in WTI now that we've had this pretty nice recovery, $8 recovery.
We're definitely on a resistance. I was looking for, wrong place. I was looking for two areas of resistance when we found the double bottom here. One of them was this 54.75 area, and the next one was this 58 area. So far we've stalled in this 58 area and a little bit lower than the 50% fib. So 58 to 58.50. Keep in mind that the 200 DMA has also now touched that 50% fib at 58.50, and the 50 DMA is also, approaching quite fast exactly the same area. So I would have to caution here. I mean, it is likely that we're going to get at least initially rejected. Now, on the other hand, if you want to be constructive, there is a chance, as I drew yesterday, that a retest of this previous resistance at 54.75 is going to act as support, and perhaps we're going to see another leg higher.
Do you have any reservations, Steve, of taking home short positions in WTI with what's happening geo-wise? I just saw a tweet that Shai retweeted that Persian Gulf oil shipments can now cost more than $500,000 to insure. Earlier this year, the same premiums would have cost owners less than a tenth of that.
Yeah, it makes sense. Doesn't really surprise me. Because obviously the geopolitical risks in the area have
does
gone
that
up
bother you going home short crude?
That is one of the reasons why I have not tried my luck being short again. I made some good money being short.
So you do. It does make you hesitate.
It makes me hesitate because from a technical perspective as well, I'm not sure that we're done moving higher. Now, if you change the question and ask me if I have strong hesitations about the nature of the move lower, and if I in generally expect the overall direction to resume lower or not, I don't have many reservations there. So bottom line, I do think that at some point in the near future, we're going to find a top again, lower probably than that 66.50, and continue lower. So the general direction, I think remains lower simply because I do believe that this move higher in this large channel was the corrective move. So the direction remains lower. But as you know, corrective moves can be, quite complex. So as I said, a pullback and another leg higher before continuing lower is not unlikely. So I wouldn't be surprised if we, make it above $60 before we actually roll over once again and continue lower. And yes, shorting and being short, especially overnight, and even worse over a weekend, with potential developments that we might have, is probably not a good idea. Okay, because any kind of a surprise that we might have is probably going to be crude positive, right?
Yeah, and who knows by how much.
Yeah,
Right.
That's an issue as well.
Yeah.
And at the same time, we are currently experiencing a dollar that is under pressure, and since crude is denominated in dollars, that is definitely another tailwind for, besides geopolitical risks, for the price of crude, at least in the short to medium term.
Okay. Thank you, buddy.
My pleasure. My pleasure. We have a question from Kostas. What about the DAX? I think the DAX, Costa, remains quite constructive. Yes, we did find resistance at this previous high here, but I think this was, quite a clear move lower, an ABC. We've broken above this flag. So I think that the chances that we're going to top out here and move lower again are, rather low. I think that the chances are much higher that we're actually going to resume higher towards the next objective, which is the 78.6% fib and previous horizontal support resistance area, eventually even up to the next area here, closer to 13,200. So I do think that the DAX is constructive against 12,000. And the path of least resistance remains higher. I'm quite certain about that. Now, as you know, anything can happen in the markets, but this is what I see. And you see more or less the same thing if you have a look at the US stocks as well as if you have a look at the FTSE. FTSE had a pennant instead. So yeah, I think that the DAX looks rather healthy for the time being. Yen and stocks are on positive correlation. Does that mean anything which we should take into consideration? I was actually mentioning that, and I was talking about that last week by saying that, first of all, let me explain why this is the case. This is the case because the USD yen is more sensitive to what yields are doing than to what risk is doing. So in all actuality, the question should be transformed as follows. Is it normal that we have this positive correlation that we currently have between what is happening with the price of bonds and stocks, the fact that both of them are moving higher at the same time? And the answer is no, it's not normal, it's not the usual type of correlation that we have. So the fact that both stocks and bonds are moving higher at the same time is something that usually doesn't last, long. Now, the next question that somebody should be worried about is, okay, what gives? Is it going to be stocks or is it going to be bonds? I think that in the short term might be bonds. We might see a correction lower in bonds, any kind of benchmark bond like the bonds, like the 10-year treasuries, for example. Let's have a look at the bonds. By the way, the 10-year yield for bonds hit a record low today again at minus, what was it, Stelios? 33 basis points? Oh, Stelios is already...
I'm here. 30, wasn't it 37 or something? 30-something basis points, yeah.
Yeah, okay. So as you see, bonds at all-time highs, unquestionably, and you should have expected that. This is an equivalent situation to the one we had with gold, which means a multi-year consolidation, broke to the upside, and usually explosive things happen when that, when something like that manifests. So at some point, I think that in the short term, bonds, treasuries, you can see here treasuries as well, potentially a little nice ascending wedge within a larger ascending channel here in the 10-year treasuries. So in the short term, this divergence in correlation from the usual might be bridged by bonds moving lower. But I think that in the medium to long term, what will have to bulge is going to be stocks. So I am positive stocks in the short to medium term, but I do think that we're not far away from like a big move lower in stocks. But that doesn't mean you should be jumping the gun, because, as I said, from a technical perspective, and just by paying attention to what the market focuses on at the moment, you should only care about looking for opportunities to buy, because the charts tells us that for the time being the market doesn't really care about the underlying fundamentals or whatever. It's just all about the hype of central banks being very accommodative, becoming again even more accommodative, and providing more liquidity to the system. So until the market starts worrying more about the rest, you should not fight it. As simple as that. Coach is your guest here, by the way.
Yes, Steve.
Okay, perfect. So
Bryn is here. Okay, thank you, Steve. Nice rundown. And I'd love to see the bonds pull back to your blue line.
Yeah, that would be a nice move indeed.
Yeah, thank you, buddy. Bryn, welcome back to Face. What a great time to have you on. So I'm going to see if I'm going to unmute you, Bryn. And you'll have, there you are.
Hello, good morning.
Good morning, Bryn. It's been a while. Welcome back to Face.
Thank you. Yeah, it has been a while, actually.
Do you want to share your screen?
Sure.
Okay,
Sure.
so you just hover your mouse over that area and it'll give you a screen to share.
Does that look like it's sharing?
Yeah, it's sharing. Okay,
all right.
Henry.
Well,
Henry
you know me,
Hub.
I'm more about fixed charts versus, all you guys have all your live stuff with all your technical analysis all over it.
Yeah, and it's interesting. I really want to talk about this, but can we first start with you as a trader, Bryn? I want to pose the same question to you that I did to Steve, because a lot of people do trade energy. So let me ask you this. Are you hesitant in this current geo environment, even if you're bearish and you see a reason to play the short side of crude, to do so, knowing that, we were only a minute or so away from a strike last Thursday?
Yeah, I mean, for me, I guess I look at it a little bit more micro than these big macro issues, because those a lot of times can come down to momentum and groupthink, right? On if one of these events occurs, because unless realistically you see the spot price of a commodity run up, in a lot of ways these macro events, aren't, they're just noise. So
you think that this could just be noise? What's happening? What could happen in the Straits of Hormuz?
Well,
to me, if it's noise, it's very loud noise.
Yeah, I guess I'd see either the Brent WTI spread widening out.
Okay.
If that were
a concern by
something
the
that so obviously it hasn't happened, right?
Right.
And so it's a fear or a concern, and maybe that would be a more interesting way to play it than just in the outright, because right now the story in the US is about infrastructure, right? And if we could, with a $7-8 Brent WTI spread, if you could export as much as you wanted, they would, and that spread would come in, right?
Right.
But we only have a fixed amount of infrastructure. There is a ton of things on the docket over the next couple of years. You know, they're even dredging the Port of Corpus Christi so that they can handle the very large, the VLCCs, right? The Supermaxes.
Wow.
You know, there's pipelines that are coming online, you know, additional ones to get that crude out of the Permian. So to the extent right now, anything were really to happen in the, you know, Straits of Hormuz or any of these things that you're looking at, other markets have faster access. And in that way, that's why I would see this spread widening out. But absent that, you know, we've seen that spread. Actually, I think it came in like 75 cents yesterday, the front spread. And, you know, that doesn't really suggest strength in the market, right?
So there's still a lot of complacency about it. There's nothing in the market that, even though people might have it in the back of their mind, prices aren't reflecting any stress about what's happening there.
Not really. I mean, you know, we had the refinery problem on the East Coast, and, you know, they tried to get some traction on the gasoline cracks.
Right.
And, you know, even that kind of petered out a little bit. And I think that's going to take a little bit longer to really expose if that's a real shortage that the market will have to contend with. So, yeah, I mean, sure, there are a lot of, you know, upside risks, and that's why probably when those things are hanging out there, you know, OPEC meetings and tariffs and you know, conflict, I prefer to play it with spreads than with the outright.
So I want to learn from you with our community today, and I bet there are a lot of people that trade crude that never even heard of Henry Hub daily cash prices. So why don't you tell us what you have on your screen, and that rectangle black box there, like a, you know, a period of huge stability and prices coming together. So what do we have here, Bryn?
Yeah, there's a little method to this madness here. I mean, I am going to link us all back to crude oil here. So don't worry about that. But, you know, I come at the market. I always seem to come at analysis or the way I view the markets in a little bit different way than, you know, kind of just
us technical analysts.
Yeah, which, you know, I mean, look, I think I've told this story before, but way starting out my career, I remember I worked at Dane Rauscher in Minneapolis, and I mean, I didn't know anything about any of this, and they had some corporate meeting where the analyst group was presenting internally, and they did that fundamental group against the technical group, and they had a competition and had, you know, for the last year or something, and it was just a flat out draw, right? I mean, neither one is better unless it's better for your style of trading.
Okay.
So anyway,
you know what? That brings up a great question, because I've interviewed Schwager, and he talks about the difference between it. And he says the major shortcoming of a strictly fundamental view of a market is that if the fundamentals are good at a point and prices keep declining, say it's, you know, bullish view, then prices are even better. And where as a fundamentalist is your stop to control the risk of a fundamental idea?
Well, and a lot of that comes down to, you know, the length of time that you're holding a trade and your VAR, right? Or your capital risk. So, I mean, certainly, even if you're executing something in a, you know, short term on a technical signal, you always have a stop, right, under which you would get out. And it's no different, right? If you're building sort of a fundamental picture and you know, putting a trade on with the expectation that sometime within the next 3 months, for example, it will mean revert, let's say.
Okay.
And in a lot of cases, especially in energy, it's spreads, either basis spreads or time spreads. And
so you're willing to take almost any kind of price risk
Well,
see
let's
if a 3
say
month.
your VAR is $1 million, right? Then
Oh,
you're going to
okay.
get stopped out. It's
I
no
got it.
different. I mean, either it's a corporate VAR or risk limit, or it's your own personal one. And
Okay.
and you set those for yourself when you're, executing any kind of trade.
Okay.
So yeah, it doesn't really, just because it's fundamental doesn't mean that you're pig-headed, right?
Okay. Yeah.
It just
Okay.
means,
That's a great explanation.
especially when you're employing a lot of capital, massive capital employment in positions in commodities on a longer dated basis is certainly expecting that they didn't get in at the right time, and that, there's going to be some level of,
Drawdown.
P&L swing before you hit your target, and
Right.
and also a point at which you find out something's changed, right? And you have to get out.
Okay. All right. So what are you seeing here?
Well, so, obviously natural gas is just a very boring commodity in the summer. So I don't really want to spend a lot of time on that per se, except for to build the overall kind of Permian picture between oil and gas. And so I like to start with this chart because you can kind of see, you're right, I have this box where over, since the shale revolution,
Right.
prices have just really stabilized in the summer in a pretty tight range. And most of that is due to the fact that, natural gas is has 2 seasons, right? Summer, which is April through October, and winter, which is November through March.
Okay.
And in the summer season, we're injecting gas into storage. And so there really aren't any days where you're actually short gas. It might be that you have less on any given day to inject into storage, but it's not like the winter when you're withdrawing for storage and there is actual price chasing, in need of a molecule that minute.
Okay.
And so it's hard to get, prices to really move outside of a range, even with like hot weather, unless you're talking regionally.
So
And
you leave it alone until the winter season, and that's when you become a natural gas trader? Leave it alone the rest of the year?
well, what most natural gas traders spend the summer doing is putting on winter spreads, right? So at times when flat price gets pretty low, you start to look, spreads that usually blow out in the winter. And let's just take like March, for example, the spread between Feb and March. I think last winter it ran up to like 38 cents before it ended up settling maybe like flat, or I'll have to go back and look. And that's, when that gets on people's radar, those are the types of spreads that start to run. And that may happen in September, it might happen, in October. And so you just kind of look to pick up some of those types of spreads cheaper in the summer. And then also, for the last...
You buy straw hats in the winter.
Well said. There you go.
That. Okay. Interesting. Okay.
Yeah. And I mean, and then short of that, obviously, it's such little ranges in the summer that's a pretty easy, thing to day trade. It's just you're not going to, get very rich, right?
You lower your expectations on ranges during that time frame.
Well, so if you take a look at where we're at now here, right? The red line is 2019 cash. And, so far we've had a tough time trying to, coast on into this range as we have in previous years. And I'll talk about why that is. But typically after the 4th of July is when there might be a turn to the upside. You have, and this year especially, I think 4th of July is on a Thursday. So you're going to have, Thursday, companies are going to be closed. Friday, especially when you look at a lot of factories and stuff like that, they'll do a 4-day weekend. And you just end up with less demand.
How about us, Bryn? Did we get Friday off?
No.
No? Oh, gosh.
Well, you can take it off.
All right. Okay.
All right. So that's kind of, sitting here with this, bumbling around here on the bottom. Nobody gets really it doesn't natural gas has a hard time gaining much momentum to the downside at these levels for a couple reasons. One is that, so this is, what we looked at here was just Henry Hub, the daily spot price.
Right.
But if we go over to this chart, the black line here is now Henry Hub, the daily prices, and all these other colored lines are all various, trading hubs around the country, right? Because Henry Hub isn't really the story. The story is under the hood and all the regional dynamics. Okay. And so you can see, if you get yourself away from Henry Hub, you can see the type of volatility that we have going on day to day across the other markets. And they're all a reflection of the local supply demand dynamics. Okay. It's either a producing area or, a consuming area, and restricted by pipeline capacity generally. Okay, and that's really...
the one in Florida is the most volatile, or all over the place. Is that thinner? Not as big to have the kind of swings? I'm looking at the turquoise line.
Oh, so that's East Texas. That's the Permian.
Okay.
So that's Permian production. And so that's exactly where the focal point is right now in both gas and oil. So this light pink line up here is sort of the Marcellus area, the light pink and the bright green, which are almost flat to each other. And several years ago, those two hubs were swinging wildly and pricing negative, like we see this aqua line, until they got enough pipeline capacity to take away, to get it out of the region and move it all down to the Gulf Coast.
Okay, so it's more of it being kind of embryonic and not having the infrastructure yet.
Exactly. So now you have this Permian area, right, that is an oil play. So realistically, what they're, the producers are drilling for oil in West Texas. But for every barrel of oil that comes out of the ground, like 30% of that is associated gas. Okay. So as a result, they're, without even being a natural gas producer, we're producing all of this natural gas in West Texas. And, you can kind of see the schematic behind the scenes here, the pipeline infrastructure. There really isn't much to speak of to go directly from West Texas to the Gulf Coast. You have to kind of go around the horn. There's not enough capacity. And as a result, it really gets stranded in region. And literally, it's not even part of the economics for these oil producers. And so dumping this gas at free, is a nuisance at best. And realistically, what they're doing with a lot of it in the Bakken and in the Permian is they're flaring it. Which is what, burning it off? Just burning it. Just burning it, just to get rid of it, right?
They bring
right at the well.
Bring some marshmallows with them, or?
Yeah, right. Okay. Hopefully what they bring is, like a waiver that they've gotten to do that. So, there's, some people are saying that it, 2 BCF, 3 BCF a day, whatever.
It seems wasteful.
Yeah, I mean, use it or lose it, and we're just losing it. So now we have this interesting situation going on. And I don't know if I can go to this. So does that share too? Do you see an oil? I don't know. Oh yeah, there we go. Please move it away. Can you see Permian spreads?
No.
Or do I have to share? Oh,
you have to share again. Stop.
I have to do a new one. Okay.
Yeah, most likely.
Let's see. I didn't know it was going to be that complicated.
Yeah, there we go.
Okay, so essentially, what we have going on in the crude markets is we're awaiting pipelines, and they're awaiting pipelines out of the Permian to the Gulf Coast for both gas and for oil. And there is a huge pipeline coming on out of the Permian area down south, heads down south of Corpus Christi, called Gulf Coast Express. and it's a 2 BCF a day natural gas pipeline. And it's expected to come online in October. And so, you know, the market is somewhat, you know, is really trying to figure out what that means. And as a result of that kind of impending pipeline, all of the oil producers are given waivers. They're allowed to flare natural gas for longer. Normally it's 30 to 40 days after you drill the well that you're allowed an exemption to flare. Right. They're being extended and extended for, you know, it's for up to a year here in anticipation of this gas pipeline coming online. And you can almost look at that as it's been a bit of a cap on production in the Permian because, you know, they want to produce more. You know, you can get oil out of a region a lot easier than you can get natural gas, right? Because at least you can stick oil on a truck, on a rail car or something. You know, natural gas, you'd have to liquefy it to do that. So as soon as that pipeline comes online, you know, you've got all this gas that's been flared that can now hit the pipeline, assuming there's processing capacity for it. And then it frees up, you know, producers that were being held back from that standpoint, right, of oil to be able to go drill for more. And you can see the dynamic playing out in both the Permian markets in oil and gas. This chart right here is the spread between Midland, Midland is West Texas, Permian, and then the Houston, WTI at Houston. And kind of starting the beginning of the year and moving all the way down to currently is the green line. So that spread has been coming in. And a lot of that is the result of, you know, you have existing pipelines in the area that had tariff rates around 4 and above. And now these new pipelines have different tariff structures.
Really reduced.
Right. So just at that, you know, you just have, so let's say the oil that could now ship on these pipelines for $1.30. And I mean, I know I'm simplifying it and people can say, well, you know, there's a lot of other little nuances, but, you know, their alternative was, you know, rail, truck, which, you know, is $10 or, you know, an extremely, you know, proportionate, much more expensive, you know, means of getting it out there. So now all of a sudden you have this oil delivered to the Gulf Coast at a cheaper landed price. Let's put it that way. And so you can see that playing out in the spread here. And it's ultimately pushing itself through to the WTI Brent spread. And I think I have that. Let's see. Well, not in this one. But ultimately, and I think we saw that in the narrowing of it somewhat, is that now you have a cheaper landed Gulf Coast crude oil, meaning, you know, it's a cheaper product that can go overseas, and hence, you know, at some level it filters through to the Brent WTI spread. So many things are originating from this Permian area from a logistics standpoint. And let me go to this other screen here and you can see the same thing. Let's see. In natural gas. Let's see, did that?
Okay. Yeah, it came up.
Okay. So, you know, you look at this same area here in natural gas. This is the Waha region. So, you know, Midland and Permian, Waha, kind of all the same area. The red is existing kind of pipeline paths coming out, and the blue are proposed. This bottom blue line is the Gulf Coast Express that's supposed to come on in October of this year. And then we have a big one coming on, you know, the expectation is October of the following year. And you can translate that back to the futures curve here. So this is Waha futures, right? And you can, right now, I mean, for the month of August, it's 6 to 10 cents for the outright commodity, right? That's what natural gas in West Texas is trading for. And as you get here, September and October, right, anticipation of line pack into some of those lines, you can see that the price is just significantly move up, right, and recover. I
Right.
mean, now by January, you're getting a whole $2 for the gas.
Right.
But then the expectation is that oil production increases, overtakes, now you again have excess production over capacity, and we have to wait again till next October when you get the next pipeline that comes online and alleviates that bottleneck. And so we're constantly, trying to eliminate bottlenecks. But the thing to keep in mind about all of that is that just brings more product to market. Removing a bottleneck is like step one. Step two is how much more supply there is.
Right.
And I would say
it's an incentive to produce more. So the fact that there's a pipeline is kind of a bearish fundamental because there'll be more production. Is that?
Yeah, I mean, and that's where a lot of the bearishness comes from, is the exponential growth that we continue to see out of West Texas. We're getting closer. Last year we not as many of these pipelines were as imminent to completion, but this year there's a lot that will be put in service.
Yeah. And
especially in natural gas, it's like you had 2 BCF a day that was stranded or being flared in West Texas, and now you add this pipeline. So it's why people just are reluctant to buy natural gas, even though, I don't know, I mean, storage, it's kind of in the middle of the range. I suppose you could make like, does that have, we're not as full or we're full. But realistically, the expectation is, come October, things are going to look really different. You bring
these.
Is
that a high conviction idea of yours to be accumulating natural gas, or at least bullish, constructive positions this summer, Bryn?
No.
Or what is one of your higher conviction positions?
I will buy winter spreads.
Okay.
During the summer.
Okay.
So March, like I mentioned,
okay.
I don't really, the March-April spread is ridiculous. That's it's just some weird legacy thing that's happened. But, and then also.
Are they liquid this time of year? Okay.
Oh yeah. Yeah.
All right.
And there's a lot. So right now the gas market, July to August, Sep, and are backwardated. And, that doesn't really entice a lot of gas to go in the ground. But if you look at like August to December spread, it's like 30 cents. And that's a pretty decent spread. So the problem, in the summer is that people will, put gas in the ground and they'll sell winter, which is why it kind of takes a long time. You don't ever see winter start to rally until you get later into the fall, right? And that whole trade is put to bed. And so what I'm looking for is we have all of this supply coming, towards, let's call it fourth quarter, end of third quarter and fourth quarter, in oil and in gas. Because
of new pipelines.
Because of new pipelines, right?
Yeah.
So what you need on the other side of that, like the expectation is that this gas supply will go to new LNG plants. But the timing is not going to be exact. They're not all going to come online at the same time. Some of these new Gulf Coast LNG terminals, as well as getting, a lot of it is also expected to be exported to Mexico. And there's a lot of pipeline issues there. And so that's where all the eyes are, is logistically, can we get this product out of here? And the same thing in oil, right? Can we get all this Permian production out of here? And in oil, we talk about it's so light, this shale production, can, refiners around the world really process it? There's been a lot of.
That's interesting. So it's easier to process a heavier crude than a light crude.
It's not that I wouldn't, I mean, I don't know if that's the right word. I think it's, a refiner is a complex algorithm, right? That's run to optimize the cheapest crude, and over time, the cheapest crude historically was heavy crude. And so there are just so many refiners that were just sort of set up to process heavier crude.
Okay.
And so in a lot of ways, it's just a matter of that is
Capacity
another
again.
logistical,
Yeah.
Timing thing, and definitely something to think about. I read an article the other day where a lot of these Asian buyers of crude oil, they don't want WTI from Cushing, because if a barrel has gone through Cushing, the reputation is that it's been blended as it's gone through there, because it's either, sketchier crude from, some of the smaller wells, or from the Bakken area, crude that really needs to be blended in order to meet specs. And what they'd rather have is WTI Permian. Like, that's originally West Texas Intermediate,
Exactly.
actually refers to crude oil produced out of West Texas.
Right.
And
Which is
so
what Permian is, and not the
is West
Bakken.
Texas.
Yeah,
and so there's been kind of, this preference to make sure, your crude is sourced from that region.
Mhm.
And in that way, I think it's going to be interesting to see, you see WTI is lagging behind the entire pack. Let's go back to my crude thing. I'll share this one. New share. And just stop me if we're running out of, I don't know how long we're supposed to be going for.
Okay.
So, here, let's just go to one. There we go. You can see there's Cushing is the black line here, Midland, which is the West Texas, and then Houston. And the dotted lines are just from, it's a month ago, right? So obviously the curves have shifted down, but, prior to this last little bit of pipeline, because we had a couple that were put in service the last month or so, Midland was really bringing up the rear, but even that has moved as a premium to Cushing. So
no one wants.
I never like selling the cheapest seat, that's out there.
Right.
Because in that way, any sort of logistical problem, people are gonna, short the cheapest one out there, right?
Right.
And the same thing if you look at kind of the overall complex, right? You got your Brent curve, and then Oman, and then your LLS, which is, in the Gulf Coast in Louisiana, right? And then you got your Houston Gulf Coast, and then you got your kind of landlocked in Midland, and then Cushing. So, obviously Canadian crude is then like another $15 lower than this, but, do you want to be short the cheapest seat when that's going to be the supplier? If the theory is that, the production story is so bearish here in the US, but global spreads stay wide, then as long as we have the infrastructure to get the crude out, then it's fine. It's if you start to see these global spreads collapse. I think a few years ago, the Brent WTI spread was $2.50, $3. So, there's certainly a lot of margin in that. And that just doesn't say weakness to me.
You open my eyes to what a complex universe it is, and the energy sector, and just covering these two products. And would you say that fracking has revolutionized the kind of analysis that you had to do before that revolution?
Well, I would say that it makes historical comparisons difficult.
Okay.
A lot of 5 years is about as far back as you can go.
Good point.
Just because you even think about how a hurricane impacts, these two, gas and oil now versus how they used to, right? Before, when it's all sitting out there in the Gulf, there's a lot more at risk.
Okay.
And now majority is inland.
Right. Interesting. I have a question from one of our attendees. So how can you trade that spread? From Scott? They are tooled for heavy crude. It costs $1 million to retool. That's his question.
Was that two questions? The first one was, how can you trade that spread? And is that the, I'm assuming maybe Midland to Cushing, or
or probably the bull spreads that yeah, I'm not sure exactly what it means. So.
Well, so, the interesting thing is, and this is what I think is kind of a shame, and it really boggles my mind that the structure is still like this. But, all of these, different basis locations in gas and in oil are screen traded on ICE. So, you get an ICE subscription, you have, your account, and you can, you point and click, right?
Yeah.
All of these. Now they're not screen traded on CME, right? Just the benchmarks. As well as so many of these spreads are done, through voice brokers over the counter.
Yes.
Just because there's some complexity to it, which, is not a barrier. As long as you have a clearing account, you can execute any of these spreads through a voice broker and have it submitted, through your clearing account. So, I almost sometimes wonder, like, do I need to go on an education tour of,
You do.
In this world of, so much electronic trading, it's almost like some things have gone by the wayside and seem unobtainable. Now, ICE is unobtainable in that if you want to have oil and gas access for trading, I think it's like $2,000 a month.
Wow.
And that's, how is that possible, right?
It's like having a Bloomberg.
Yeah, right. But it's literally just a trading screen, right? I mean, it's just a proprietary, it's like logging on to their screen. Or I know there are several kind of other, let's just like interactive brokers, but what do we call those? Futures houses,
Yeah, clearing member firms.
Yeah,
FCMs,
right? That will you can pay for ICE exchange access through them, but in a lot of them they only allow ICE Europe and all of these spreads.
It's a racket to collect fees. Let's call it what it is.
Yeah, right. Well, and they're very private about, getting access to it. But that's why I say you can also.
You have to be Bobby Axelrod on Billions to get that platform. So,
right. It's a thing you have, obviously, because the contracts are bigger, right? The contract sizes and all of that. But so my thought on that, because of course I've worked for the big shops where we've had ICE and had everything, and that's all I knew, and that's all I traded. And then I've had prop shops where you literally just kind of have like the futures contracts, right? I've had voice brokers, and the thing is, I think just because you can't trade it, you can still take signals from the spreads.
Right.
And so for me, I don't, whether I'm executing it or I'm using those spreads as a signal to execute something else, right? Mm-hmm. You a lot of times see a movement in some of these location spreads long before you see something in an outright flat price. And so you can still access, the settlement prices and look at where some of these markets are going. And I guess I think I've probably am a broken record on this too. Like, I feel like if you're just looking, let's say, at WTI crude oil, and you don't look at any of these other, all the grades of jet fuel and HOGO spreads and cracks and different, oxygenated blend stocks and all of the different things that go under it, it would be like, and the only thing maybe you looked at was inventory report every week, and then to try to see where WTI is going. That would be like if you had a screen where you could see the S&P futures, but none of the 500 companies' stocks that make it up. And then the only piece of information you had every week was like, non-farm payrolls every week. And you're wondering, like, why isn't the market reacting to that? Yeah. Right? It's very similar thing. Crude oil is really the index, these benchmarks. And we saw that in that other chart I showed with natural gas, with all the other locations moving all over the place. Those are the stocks, right? Those are the 500 stocks that make up the S&P, right? And in that case, it's NYMEX Henry Hub.
Right, or you're trading the Dow, but you don't look at you only look at IBM.
Yeah, or you don't have any of them, right?
Yeah.
Yeah, you only have one, and it's like you didn't even know they existed.
Okay.
And so I always encourage, unless you're just a purely, I mean, if you're just technical trading, like don't even listen to this stuff, right? It doesn't even matter to you.
Right.
But I find a lot of people, no matter what, they really are a hybrid, right? I mean, they're using technicals for, kind of intraday stuff, but they're watching fundamentals.
The fundamentals give people the bias, and the technicals give them the triggers.
There you go. Right. And so just, I don't kid myself that I know like all the technical, entry and exit points. And, you got to sort of dig in and know that, you might not be seeing the whole fundamental picture either. And just from the standpoint, like you want to know what sectors are doing. These are sectors, right?
Yeah. Your background in this industry and analyzing and forecasting, I believe that you should consider training energy analysts because of your knowledge depth and your handle on the markets, and educating, like you were saying earlier, for people to know that these things are available would be a great service. And you know what? You're one of the most insightful energy analysts I've ever talked to. And I've talked to quite a few.
Well, I'll just keep that right up.
Yeah, I mean, really, you could be a great natural teacher, and you have to, I think, mentor some people so that you could duplicate what you already know and give people the chance to look at the markets the way you do. Just my extremely accurate and humble opinion.
Well, I appreciate it. Yeah, it's interesting. You sometimes just figure out how much you know when you're teaching someone, right? You didn't realize you knew something so well, and then
and then they end up knowing it even better than you. It's really, Anyway, so Bryn, I hope you have a lot of success with these spreads you're putting on. I want to thank you for educating me and our audience, and I hope that pips gush down on you like an oil well that just finally hit pay dirt.
Good one. Okay. All right. Well, great. Thanks for having me. Long time no talk. Let's not wait.
Yeah, and you're forever. You're my trading warrior sister and one of the best oil analysts I've ever interviewed.
Well, thank you. All right. Well, have a great one, Dale.
All right. Thank you, Bryn.
Yep.
All right, everyone. That's a wrap for Turnaround Tuesday. Don't just count your pips, count your blessings. We'll be back with you tomorrow. See you in the chat room. Adios. Thank you, Bryn.
Thanks so much.